It's so sad self-employed people are just left out when it comes to buying a house. I mean, it's just not fair.
Very much like, give me your documents, this is what you get.
They're probably sitting there thinking, I'm going to be renting for the rest of my life.
I would rather put 15% down towards the equity of my house than IRS bill.
You have a great business making great money, but you're not able to buy a house that you want, you can easily afford. It's painful, and it's a reality for so many self-employed out there.
I think people need this.
Welcome back to Business Perfect Formula, the podcast where we take the confusion out of the world of alternative funding and provide you with hope that everyone so desperately needs these days. I'm your host, Sarah, and today we are diving into a topic that's a game changer for all self-employed listeners out there that struggle to navigate the choppy waters of securing a mortgage. Today's topic came out of my own experience. I was made to feel like my business was of no value financially, and quite frankly, the way that the lenders calculated my income, I should be eating crackers and canned soup for my meals. I'm sure this sounds familiar to some of you that have good accountants that write off everything and the bottom number doesn't look huge, and that's what the banks focus on when it comes to buying a house for yourself. The entire process left me searching for alternatives, knowing there had to be a better way. And I found today's guest, Ricky Chavez, and I knew I had to share this information with everybody, knowing that if I could prevent just one person from going through the harrowing experience that I just had, I would achieve my goal. Mortgages can seem like closed doors for many self-employed individuals. Traditional banks often look for steady paychecks and predictable income, things that just don't always align with the entrepreneurial lifestyle. But fear not, because today we are joined by a very special guest, Ricky Chavez, a mortgage broker who isn't just playing the game, but he's changing the rules. Ricky specializes in alternative and creative mortgage options tailored for people just like you, freelancers, entrepreneurs, and gig economy workers who make their own way but need a hand when it comes to buying a home. He's here to share his expertise on how you can unlock those doors and make the dream of home ownership a reality. So if you've ever felt discouraged by the word no from a bank, you'll want to lean in and listen closely. Ricky, it's great to have you on the show. I am so excited about today's episode.
Wow, what a beautiful introduction.
You didn't know you were that amazing in my eyes, did you?
Oh my gosh, my brain is shouting endorphins.
I'm being genuine when I say that. What you do is so unique, but what I love about you and why I continuously just keep trying to jump into your world is that you really care about your clients and even my clients. Like, I mean, I'll pose a weird scenario to you and you'll try to find solutions or a lender, even if it has nothing to do with people you work with. And I just love that. You're a problem solver, and that's not always the case in the mortgage world. So I love that.
Well, thank you, Sarah.
You're very welcome.
It's easier to do that when you're working with people that do the same. So, it's a lot easier to be a pleasant person when you're working with pleasant people.
I will agree with you on that one. But let's dive into some of the fun stuff. I'd love to know, I know your story, but I'd love for people to know how exactly, it's not like you woke up one day and thought, hey, I want to work in mortgages. That's my dream.
Nobody.
How exactly did you get into this world?
Yeah, that's a great question and very well illustrated, because no one as a child thinks I want to work in, most people do not think they want to work in finance, and period.
Including me.
Yeah, you typically have your doctor, lawyer, type of jobs, sports athlete, etc. So the way I ended up here is obviously by accident, but it was part of realizing what's important. So I'm a first generation grad. I studied international business and German in college, and I was very attracted to economics when I was getting that business degree. And following college, I jumped around from Fortune 500 in marketing, thought I wanted to do marketing, but I ended up landing in the fintech space. Well, I ended up going to a tech company at a startup as an account executive, but then I ended up going to a Fortune 500 Verifone as an account executive there, actually doing what I studied, which was international business. And big corporate is not what you expect
Nope.
when you've never been a part of it.
Right.
And what I got from it, though, is I gained a lot of financial knowledge. So I'm still glad that happened, and I understood more about underwriting because I was working for a tech company that essentially would help companies accept payments globally. So
Okay.
imagine, let's say Sarah selling TrueFinco software, and or let's just think of Spotify. Let's say Spotify wanted to start selling its software globally. How would you accept payments from Brazil,
Right.
Colombia, Germany? You have different currencies and things like that, different credit cards, and so essentially, what the company I worked with, they would help companies accept payments globally. So they would go basically be in charge of implementing their software on the checkout page.
Got it.
It was interesting. It was a startup mid-tier company based out of Romania that got bought out by a Fortune 500 company in the US called Verifone. So it was weird. I was working with Eastern Europeans and in the finance space, and I would bring in these large accounts, but then they would get rejected by my own company's underwriting.
Huh.
And that's when I was faced with underwriting is a really interesting and
Yep.
annoying thing. Because I would bring in these large accounts and I'm like, hey, I found someone that wants to do business with us. And they'd be looking for ways to deny the
Huh.
accounts that I would bring in.
Wow. Kind of sounds like the traditional lending world today,
Yes.
underwriting. I
So,
can see this is all making sense to me now.
yeah, I
Why
didn't
you
include
do.
this the first time we recorded, but
Yeah,
now
it's
I've
I'm
kind of,
connecting the dots, Ricky. I'm seeing where that experience now has led you to what you're doing today.
yes. So during that time, I was also interested in investments. That was my day job. I was like, hey, I like stocks. I like real estate. I was following stocks and crypto and all of that and made some money here, lost some money here. But real estate was always the more attractive picture because it's more consistent, less of a casino for me.
Right.
I know some people are responsible and use index funds, but you just get incredible leverage with real estate and it's created more millionaires than the stock market. Um, for the average person. And so as I was working that job, I was younger for the position I was in because I worked a lot throughout college and high school and in a white collar field. So I kind of was somewhere I normally wouldn't be at that age, but because I have extensive work history, I was able to get in. Well, long story short, someone else got promoted for something else that I felt like I should have got promoted for, and I realized that's what I was going to end up facing if I stayed in big corporate because I don't kiss butt for a living. And so I decided, you know what? I'm getting kind of sick of this. I'm going to do something risky, and I want to start something of my own. And that's when I looked at stocks or real estate. I said, I'm going to go to real estate. And I was like, okay, do I become a real estate agent or a mortgage, whatever? Like, I don't know what those mortgage people do,
Yeah.
but I just knew, okay, I knew if I was buying a house right now, I couldn't buy it in cash. So I guess I would need a mortgage. So I was like, well, I guess that's kind of important. Um, it's like you want to go digging for gold. Well, maybe selling the shovels isn't such a bad idea.
Right.
Um, and so I actually had a friend that was in mortgages, and she was making some pretty significant money. So I was like, well, I like money, and I like working from my computer. And I before that, I ended up buying my first house. And that was the ultimate experience where I had a very bad experience with the mortgage person I was working with because they really didn't give me insight into the process. They were just very much like, give me your documents, this is what you get, not
Mm-hmm.
why you're getting this, why we're doing this program, why. No, there wasn't really much purpose. It was very transactional. So following that transaction, that's when I was like, I need to go into mortgages because if this person is providing this quality of service. I think I can provide more value to the
Mm-hmm.
marketplace. I think I can do better than this. And I think people need this. I don't know anyone within my circle that's digesting a complicated mortgage in a very, no, translating a mortgages in a really digestible way. I don't know anyone in my circle doing it. And I was like, well, let me do this because I feel like the world
Absolutely.
needs it. Yeah.
Absolutely.
And that's how I ended up in mortgages.
Wow.
And I start so to we're approaching the end of this story. But once I hopped over to mortgages, I started where my friend was working for a company where she was essentially they would train us and then we were working company leads. But this was a traditional, we
Ah,
call it retail lender or direct lender.
right.
And so they only have their traditional products typically. So they're typically working with the conventionals, FHAs,
Yep.
very cookie cutter stuff.
Right.
Because in the mortgage world, those are actually what resell for the most on the secondary market. So it's a very profitable business to be in if they can sell it on the secondary market. And so essentially, I was there. I would get some leads, and I would constantly get these business owners
Uh,
that the tax story, they have
yep.
the good accountant, and they would make great money. They had so much in savings,
Yeah.
more than usually the 9 to 5ers, and of course more than me at the time, more than me because I'm like, wow, this person should qualify.
Yeah.
And we would send it to underwriting to get reviewed.
Nope.
And I was in awe. Like,
Nope.
how is it possible that we're not lending money to
Yeah.
this
e-
successful business owner? And
Absolutely.
after about a year of that, Sarah, I learned I was like picking around. Like, there has to be other loans, and eventually I learned there was bank statement loans and the whole non-QM industry that
Yeah.
my company at the time didn't do. And I kind of got it in that setting. It seemed like the dark side. It's like
The
it
dark
seemed
side.
like I'm like at Weenie Hut Juniors where I was at, and that's like the salty Splatoon. Like that's like
Yeah.
that's like those other loans.
Right.
And I said, well, after I was there for a little bit, I said I need to go to the salty Splatoon. I need to see what this is about. And yeah, I that's when I went out on my own. I became a mortgage broker, and I got to learning about that. And it was after that, it's just kind of been nuts ever since
I can
then.
imagine.
Learning a lot about non-traditional loans, helping with bank statement loans, profit and loss loans, no income, DSCRs, just a whole
Right.
world of that. And now we're here,
Now we're here
and
talking about it. And I'm welcome to
yeah,
the dark side. I feel like both of us live in the dark side, and man, it's a great place to be. So
yeah,
I don't mind that we're in the dark side. There's a lot more that can get done in the dark side for the self employed. And so,
yeah.
I certainly know the problems self employed people face with mortgages, but what would if you were to break it down, what is it that self employed, what's the problem? Why is it so hard for the self employed to get a traditional mortgage to buy their own home?
It's appetite. It relates back to that first mortgage company. It relates back to the secondary market of the mortgage industry. So they call these A paper loans. That's
Mm-hmm.
kind of like the old school mortgage term, where these are think of it as like a vehicle. It's like a vehicle that has no history of damages or anything. And let's say the self-employed is a write-off. It's like, think of it as like there's a small defect. It's cosmetic. It's nothing bad.
Right.
It's just maybe something not out of the factory. And because it's something that's not out of the factory, it's not as resellable on the secondary market.
Mm,
Now, if you got in the car, it could be even a nicer car. It could
absolutely.
be a better car,
Absolutely.
but it's just the way secondary markets work because ultimately mortgages they're a business of they're it's a business
It
at
is a
the end of the
business.
day. there's a big appetite for those traditional loans, and that's why they're more profitable. And
Yep.
that's why when you go to the non-traditional route, yes, you'll have some extra closing costs. Your rate might be about the same, might be a little higher, but um, I'll loop this back to if that analogy was doesn't work, I'll relate it back to this one, which always works. It's like a three-legged stool where you have credit, debt to income ratio, and savings. Well, whenever we're not looking at taxes, we're having to edit the way that debt to income ratio is looked at.
Mm-hmm.
So now, because that leg is kind of damaged, the other two legs need to be stronger. So,
Mm.
typically, whether, you're with your capital stacking program or my bank statement program, credit is very important whenever we're not looking at
Correct.
income. Whereas whenever they're not having to band-aid one of those legs, which is actually looking at taxes, that's where you can get into like those FHA loans, 580 credit score,
Right.
3.5% down, because there's not a band-aid on that leg. So it's basically a balance of risk. And that's the way it's looked at that way. And then a lot of times many self-employed feel like they're being punished for the higher down payment, and some will even try to put more into writing off less. That's what the traditional
Mm-hmm.
loan officer is going to tell them is you need to claim more.
Yep.
Um, and the only time I will say I do that is if someone's credit is very low.
Sure.
Because if their credit's low, we can't have one pillar down, which is the taxes and the
Low
credit.
credit. Right.
So, yeah, maybe that's a bit of a
No, no,
tangent,
that
but
makes sense. And
but
so,
yeah,
and that you nailed it right on the head. Absolutely. With your analogies, that was a good analogy, but it's very true. And I even know from my experience, they said, okay, well, you need to be showing this much income and not writing it off. Well, guess what? We did that. Sure, we got the house, but then we ended up paying through the nose in taxes. So really, is
yes,
it worth it? No. In my opinion, no.
in
But
my opinion as well.
it's not. So I'm curious, if you could the highlight here. Let's open up the present. Can you go through some of the alternative funding options for the self-employed to buy their own primary residence? Because that's
Yes.
the piece that is in the the dark world. People don't know. I'm sure some people have heard of bank statement loans, but they certainly have not heard of the other options. So if you could kind of go into what those are and how amazing they are.
Yeah, absolutely. So I really like the bank statement loan, because you're still showing some documentation, but you're not having to show your taxes. And
Right.
because you are showing some documentation, you're giving the lender more documentation, and that's at least offsetting some of the risk. So that's a very neat loan. You're going to typically be put with some kind of expense ratio
Okay.
based off of the type of business you run. But my favorite thing is, as a mortgage broker that now I work with many different lenders, I like that different lenders have a different way of analyzing these. So relating it back to the secondary market
Mm-hmm.
thing, the non-traditional loans, these non-traditional lenders have different investors that are buying these loans.
Correct.
And so some have a certain way of underwriting these bank statement loans, and some have a different way. And this will relate to the other loan types I mentioned. So to
Right.
answer your question, this relates to profit and loss loans. This will also relate to um, another loan we can do sometimes is a 1099 loan, where we're just using that. But I'd say the most popular is bank statement loan and profit and loss. Um,
So real quick, and I just want to interrupt you there because we need, some people don't even, with a bank statement loan, is it like a year of bank statements or what are they typically looking at?
Yeah, good question. Minimum is 12 months, so
Okay.
you don't have to have the full 2-year history. Um, but of course, if you're providing more documentation, being 24 months, you may get better terms because, it's a lower risk. You have more consistency of
Got it.
showing income. So 12 to 24 months.
And so basically they're looking at those bank statements. Of course, they'll see the money going out, but are they looking at those from a perspective of will this current income support the new mortgage payment? Is that kind of what's being evaluated with those bank statements?
No, it's
Or
actually it's a good question. It's more so just how much income can we say this borrower is making.
okay.
That's literally it. They don't even, whenever I ask them to, when I ask lenders to calculate bank statement income, because different ones
Yeah.
calculate differently, I will say, hey, here's 12 months of bank statements. Please do a bank statement income calculation for me. And then they'll spit out a number, but they have no idea what mortgage amount I'm trying to put on
Ah,
this borrower. And what's unique about that is they shouldn't, because I don't know,
right.
I can't start working on the mortgage unless I know how much income I can use to pre-approve, because we still have to use this debt to income ratio. We're still looking at those,
Okay.
using that as a tool. Um, so yeah, that's essentially
Interesting.
how that
Okay,
works.
so that's a bank statement loan, but the benefit obviously no taxes. So it's definitely, yes, there's some requirements, but it's not quite as document heavy and you're avoiding the dreaded taxes piece.
Yeah,
So it seems like
exactly.
you could qualify for more through this typically.
Yeah, I would say my most self-employed people that, they're putting heavy write-offs, and the bottom line, the adjusted gross income is lower. Well, if it's we're essentially taking the average of the deposits over this 12-month period, and then there's going to be some kind of expense ratio. It could be 10%, 20%,
Right.
30%. And then boom, like let's say you make 100,000 based off of the bank statements, you put a 20% expense ratio, that's
Interesting.
$20,000, you got 80,000.
Right.
But that person that maybe would have get credit for
Right.
80,000, they're probably not claiming
Nope.
80,000 in taxes.
I
So
guarantee they're not because I know they'd be paying a lot in taxes. So I see where
exactly.
that makes sense. Okay.
And it
So,
gets really powerful when people are making much more. So imagine
right.
someone making 500,000. The example that we mentioned earlier of, imagine paying taxes on
Oh,
$500,000 of income. That would be a lot of money.
yep.
And these bank statement loans, they can start as low as 10%. A lot of people put 15% down. And of course, the lower your credit score, you might need to
Right.
put 20% down. But I would rather put 15% down towards the equity of my house than
Sure.
towards an IRS bill.
Absolutely. Absolutely. So bank statement loans, and then um, another one that I had never heard of till I met you was the profit and loss. So
Yeah,
how does that one work?
the profit and loss is it's a good one. I like it because some people are not as consistent seasonally.
Right.
So if we look at a 12-month history, they may be able to qualify more with the profit and loss loan. Just given maybe sometimes there's some cash that's being used. You have a lot
Mm-hmm.
of cash businesses, so maybe they're not depositing all of the cash. Like I have a mechanic where we went profit and loss instead of bank statement because some people just don't deposit all the money
Right.
that they're putting into the bank. There's some very cash heavy businesses
Mm-hmm.
still to this day. So imagine a mechanic working under the hood of a car, they're probably not rushing to the bank as quick as they can to deposit their money. And some other businesses that are similar. So we did a bank statement loan for them. Another one I did was for a tire shop, owners of a tire shop. Um, a very common in the construction and kind of blue collar fields
Sure.
that might be more cash heavy. And yeah, it's okay. So I have a tax preparer that works on these, and they understand that they're earning in cash, and they can even talk about it. And this is a tax preparer prepared a profit and loss report,
Okay.
and it's also not reported to the IRS because the
Okay.
underwriting of this bank understands the culture of these type of borrowers.
Right.
And that's where it gets really unique being a mortgage broker, having these different lenders, because you have one that's wanting a bank statement loan and wanting them to fill out a form to come up with the expense ratio.
Sure.
You have some that don't even require the form, and then you have some that are like, you know what, I'll be flexible enough to do a profit and loss report, and we won't even send this profit and loss to the IRS.
Wow.
It's just for our underwriting
Wow. I
purposes.
love that. So for the profit and loss loan, is it a 12-month profit and loss that they're creating for this loan? Okay. So
It's
12-month
always
profit
12
and
months.
loss. Okay. No tax returns again. What
No,
about okay, so much less document heavy, much less
even less.
requirements.
Yeah, yeah.
Okay. And for both these loans, bank statement and profit and loss, what's the minimum? And obviously, I know it's going to be a higher credit or down payment. What's the minimum credit score?
Well, my profit and loss lender can actually do no credit score.
What?
But if you're below 600, that's worse than having no credit to
Right.
them. That's the way their underwriting looks at it, because bad behavior is worse than no
Right.
behavior. Um, but their down payment is going to be higher for that. You're
Correct.
looking at a 25% down payment on that one. And of course, your rate's going to reflect the higher rate because you have no history of being able showing you
Right.
pay back money to
However,
creditors.
but it's an option that they
It
would
is.
never have anywhere else. So if, there's that borrower in that unique situation of no credit score, really challenged,
Yeah.
self-employed, they're probably sitting there thinking, I'm going to be renting for the rest of my life. There's an
And
option.
this type of loan is very common in the Hispanic community. A lot of foreign individuals that come from backgrounds of not trusting financial
Mm,
institutions, they are um, borrowers that often just don't use credit cards. They don't use
correct.
this or that. But then when it comes time to buy a house, a lot of them, that's the first time they're even getting their credit pulled. And so a lot of times those are the type of people that I have working with those type of
Interesting.
loans. And that specific bank also accepts I-10, which is a
That's what I
tax
was
ID
just going to
number.
ask you. Okay. That's good to
So that's a
know.
bank that's very understanding of that culture.
Right. Wow. Amazing. Okay, so we've gone through those two, and then the third one is the 1099.
Yeah, there's a 1099 one. Yeah, we can, for example, you may have, uh, this is probably my least popular because a lot of times people that are making significant amounts, we're usually going to do a bank statement loan,
Okay,
but you could do a 1099 loan as well. But I tend to get better terms with the bank statement
got
than the
it. Okay.
1099.
So while we're talking about terms, because I don't know about you, but people assume whenever I talk about alternative funding, especially in my world, they're like, oh, it's going to be crazy high rates, ridiculous fees, when in fact, that's not true at all. I always love like showing them a term sheet and they're like, what? That's lower than my bank even quoted me. So for these types of loan programs, I know you mentioned the fees are a little bit more, but let's talk about that a little bit with fees and rates.
Yes, so you're typically looking in North Carolina. I'm in the Carolinas, so there's not like transfer tax, and I'm talking real estate
Mm-hmm.
now, closing cost. Like depending on the state, you may have transfer tax, you may have more attorney fees, but generally speaking, we're talking about roughly about a 3% closing cost over here,
Yep.
and that's all third party. That's attorney, that's
Yep.
your escrows, your whatever tax, your appraisal, all that mumbo jumbo. Um, Typically, once you add the cost to do the loan, you're looking at closer to 5% closing costs rather than maybe 2.5 or three.
Okay.
So you're paying more in closing costs just because these loans, since they're considered higher risk, the compensation has to be built outside of the
Yep.
interest rate and it's put into the closing cost. Traditional loans, the compensation is built within the interest rate. And
Mm.
that's a very interesting concept that a lot of loan officers don't even know
Mm-hmm.
that work in the traditional world. They don't even know that compensation is built into the interest rate. They just know these are the rates my company have, and
Mm-hmm.
that's it. Um, but yeah, so that's the difference there is, look, you're doing a less profitable loan for the investor, so they're going to need to charge a little bit of
Correct.
money on the closing cost. Of course, you're saving a ton of money on taxes, so I think it's worth it.
If you weigh it out, it's absolutely worth it. I mean, I'll speak from personal experience. I would absolutely pay more in fees and a higher interest rate if that meant I could get into the house that I'm looking for without the nightmare of a process, but also get into the house that I'm wanting instead of, qualifying for something much less based on my taxes. I mean, you have to look at it that way.
Yeah. Well, I would argue it's even the difference of qualifying versus not,
Yeah,
because in many instances, maybe some individuals, like in your case, wouldn't have claimed enough.
right.
So really,
We wouldn't
most
have
of the
even
time.
qualified. So it's not even, yeah, not
Yeah,
even qualified, period, for
it's really a
traditional.
black and white choice. It's like, okay, option A, nothing. Option B, something.
Right. No,
And
it's
that's typically what you're looking at. And then as far as interest rates, um, I would say you're typically looking at a rate that's maybe going to be, uh, it really depends on the down payment. Whenever you're going non-traditional, the down payment is really credit and down payment are the biggest indicators. For example, a bank statement loan, if you're only doing 10%, you have very little skin in the game for that type of loan.
right.
And so your rate could be, for example, I had someone, their rate was probably in the mid nines, but if they were willing to put 20% down, they were like in the low eights.
Okay.
So your down payment has a huge
Absolutely.
impact, more than even in traditional loans when you're going non-traditional. And it makes sense because in the traditional world, you already have the three leg it's stool. So your down
Hmm.
payment is just kind of like cherry on top. But whenever they're being flexible on no taxes and you're trying to have less skin in the game, they're taking on much more risk. So if you're willing to put that higher down payment, you can probably get a decent rate because a low eight in the non-traditional world, you're not that much higher than a traditional loan. And I'm talking without points. I'm
Right.
talking, traditional loan nowadays, you're looking in high sevens
Right.
without any points, typically. Now the 30-year, now some viewer out there and might say, well, Ricky, the 30-year average mortgage rate is 6 point something or low sevens. But one thing that people need to take in consideration is there's a lot of new construction and they're giving
Yes.
normally ten or fifteen
Hmm.
thousand dollars towards buying down the interest rate. So
Yep.
that's going to skew the data for the average mortgage rate. Because if the average mortgage rate, if 20 or 30% of the rates are being points bought down, that's skewing the data.
Absolutely. Absolutely. Your self-employed clients must love you. I mean, when you get them into these loans, I bet you get to feel like the superhero because you're doing things for them that they could never have accomplished without you. So I would imagine you get to feel like you put on that superhero cape on
Uh,
closing day.
it's more work. I will
Yeah,
say
for you.
it's more work for me, so it's there is a cape, but it's harder to pull that cape
Yeah,
out. And by the time you get to put the cape on, sometimes you're a little tired.
I can
But at
imagine.
the end, it's worth it because you know you're impacting a life. But that's
Absolutely.
why a lot of loan officers, mortgage brokers, or whatever you want to call us, because we have too many names, lenders. That's why a lot of people don't do these loans. It's because it's hard to have a very scalable business with doing these loan types because it requires more documentation,
Mm.
more of a personal touch. Um, but it's something to me that it's still important to do, and these people need attention.
They do, and there's not a lot of brokers out there that are. I mean, now I probably understand a little better. They don't want to tackle the work, but there's not a lot of brokers out there offering what you offer, and I applaud you for being willing to put in that extra work because we need you. I mean, it's so sad how much self-employed people are just left out when it comes to buying a house. I mean, it's almost it's just not fair. I mean, you have a great business making great money, but you're not able to buy a house that you want, that you should be able you can easily afford. Just it makes no sense, and it's painful, and it's a reality for so many self-employed out there. So
Yeah.
that's why I love what you do. And Ricky, before we forget, because we're going to wrap up here pretty quick, I know there's going to be some people that are listening to this that's going to be like, whoa, this is mind blowing. I need to do this. Where can people find you?
Thank you. Great question. Well, website will be rolling out hopefully in the next few weeks.
Okay.
Um, it's the letter U, Avance, AVANCE.com.
Okay.
And the idea of that branding is I'm trying to help people advance.
Hmm.
So you advance with an advance without a D,
Yeah.
because uh, it's actually a word that comes from Spanish,
Okay.
avance, it's to advance, and I wanted it to be multilingual for. I work with a lot of people on both sides that speak English and Spanish, so I thought it was
I like
neat.
it. Okay.
So that's my website. As far as my phone number, it's 828-980-1957. And then I'm not very big on TikTok like Sarah, but I post what the algorithm,
I
I
like
don't
what you
know.
post. You post a lot of like foodie stuff. I like that little series you've done.
Well,
It's
TikTok doesn't like what I
I
post.
like it. It's always interesting.
But I'm realestate.ricky
Okay.
um, on TikTok, and at real estate underscore Ricky on Instagram. I actually have more of a following on Instagram,
Instagram.
and I'm more active on Instagram. Um, and yeah, so real estate underscore Ricky, and my phone number and the website hopefully will
Okay.
be rolling out. And I'm very excited for the website because I have a different website that should be rolling out than most mortgage people, because I have identified, instead of just putting products on the website, I have put avatars on the website.
Okay.
So if you're self-employed, first-time
Awesome.
buyer, seller, etc., you go here, and then I have it by the problems you probably commonly
Yeah.
face, and then the products come out.
Got it.
So I think it'll be
I like that.
hopefully
So
unique.
one more quick question, and then we'll end our fun together today. If you were to give one tip for the self-employed, like to prepare to be able to eventually buy a home, with these alternative products, is there anything they could be doing to prepare now?
Yes, that's a great question, Sarah. I would say very similar to your field, we're being flexible on income, but because you're being flexible on income, that credit needs to be there.
Yes,
The
yes.
credit is just this three-legged
Yep.
stool. One of them goes down, you can't have credit and income go. You can't
No.
survive off of
Nope.
a stool off one leg. That's a
Yep.
unicycle. We're not, that's not a stool anymore. So
Right. No, it's true because if they don't have the taxes, they don't have the income, underwriting has to have something to hang their
yes,
hat on to say Ricky is going to be a good borrower, and that's where the credit comes in. And man,
yes.
we could talk about this for hours, but but it's people overlook it so often. But that
Yeah.
importance of credit, especially
And then
self-employed.
if we don't have the credit or the taxes, remember, then we're looking at a higher down payment. So just
Correct.
just
Saving some
expect it.
cash.
Just expect it. Know that if it was your money, if Joe Schmo, your neighbor, was asking you for $300,000 or $400,000, and they couldn't have any pay stubs or taxes to show you, and they don't have a good history of paying Mary Ann, who is your other neighbor, you're probably going to want some skin in the game. And it's really as simple as that neighborhood example sometimes when it comes to our own
Absolutely.
finances. And the other thing I would say is, just because I can do no taxes doesn't mean you can't. Just because we're doing no taxes doesn't mean you don't have to make money either. The
Right.
profit and loss and bank statement loan, it's still wanting to see alternative forms of
Correct.
income. Just because there's no income, no taxes doesn't mean you don't have to make anything. You still need to have income coming in so
Absolutely.
that you can be pre-approved based off of the debt to income ratio.
So we're out of time for today, but I think we're going to have to do another episode and dive a little deeper, give some examples. And I didn't even dive into the whole bridge loan
Oh,
scenario. We can't get into it today because I love that one. We're going to have to talk about it because
bridge loan?
there's so many people that don't, that whole thing we talked about where you're selling your house and the new home, that solution, that'll be another episode because that in itself is another superhero
Yeah, that's a
move.
good one. And
Nobody
then
knows about
the
that one.
client you sent yesterday for the second lien, he loan.
Yes. Yep. So another session's going to have to happen. Um, So thank you, Ricky. I so appreciate your insight, your wisdom today. And thank you, listeners, for joining us on this episode of Business Perfect Formula. I hope all of you found today's conversation with Ricky as insightful, enlightening, and empowering as I did. Ricky's insights into alternative mortgage options for the self-employed are truly a game changer that everybody needs to know. He offers hope and practical solutions for those navigating the often challenging world of securing a mortgage. Remember, being self-employed doesn't mean you have to settle for less or struggle to achieve your dream of homeownership. With the right knowledge and resources, you can find the mortgage solutions that work for your unique situation. Ricky has shown us that there are creative and effective pathways to unlocking those doors, and I encourage you to explore these options further. If today's episode resonated with you or provided you with that little spark of hope that you needed, please consider reaching out to Ricky for more personalized guidance. And as always, stay tuned to Business Perfect Formula for more insights and strategies to help you succeed in your entrepreneurial journey. And don't forget to subscribe, rate, and leave your review if you enjoyed today's episode. Your feedback helps us continue to bring you valuable content every single week. Until next time, keep pushing forward and exploring new possibilities. I'm Sarah, and this is Business Perfect Formula. Thanks for listening.